Hello, folks. It is Monday, December the 18th. It's about 8 o'clock in the evening on the East Coast of the United States. In this video, we'll be looking at the U.S. stock markets. It's been a while since we've looked at these charts. So let's jump right in. This is the NASDAQ in the daily time frame. And what immediately jumps out to me is how overbought this market is. If we look at the moving averages, we see obviously they're in bullish alignment, which means, 50s above the 200, 20s above the 50. But also note how extended the moving averages are to one another, and then price, how extended it is relative to the 20. And so anyway, the price action very overbought at this point. Similarly, the MACD is pushing up into a level of being overbought. We can see, from this prior peak in MACD, that's where price rolled over last time, and we're at that level again. And so anyway, multiple indications that the NASDAQ is very overbought at this point, pushing up into a potential resistance at this upper median line extension of this Andrews pitchfork. Energy obviously very elevated. NASDAQ weekly time frame, we've got this prior high. So we've got this horizontal resistance level. This was all-time high reached back in late 21. November of 21, and here we are again at that same level. Of course, this little short candle, that's the current week, which just started. And we'll see as we continue in this week, are we going to push higher or are we double topping at this point? MACD's got a little ways to go before it bumps up into this massively overbought level. Energy very elevated. Oh, and note that MACD is in bull mode on a buy signal, which suggests that the primary trend is to the upside at this point. But again, price is very overbought, way up, extended above the 10-week moving average. So in the monthly time frame, again, we see price pushing up into the level of the prior all-time high. And of course, at this point, we're past the middle of the month, and this candle is a bullish, impulsive price nearly at the high of this candle. And so that is an impulsive candle, which is bullish. MACD again in bull mode on a buy signal, energy very elevated. So other than being very, very overbought, the NASDAQ is looking bullish. But I would point out that the reason the equity markets are behaving the way they are, in large part, it's due to massive buybacks from the major corporations. They're buying back the shares of their stock. And of course, that drives the prices higher. And so in the upper panel of this chart, that's what we're looking at. This index shows us companies who have bought 5% or more of their shares, repurchased those shares. And so we can see the correlation. These two, this vertical line in both panels is on the same date. That was 27 of October of this year. And note the correlation between buybacks and price. And so again, just emphasizing my point that the current bull market that we're seeing in the equity markets, it's not a organic mom and pop buy, I buy 100 shares of this, you buy 100 shares of that. This is corporations buying back shares of their own stock. And then, of course, this week we also had, or actually it was last week, we actually had what appears to have been a pivot from Fed Chairman Powell. But now we've had 2 or 3 of the other Fed talking heads trying to walk that back, basically pull the equity markets down from their over, overexcitement about rate cuts in 2024. Market is currently pricing in 6 interest rate cuts in 2024. And of course, in my opinion, that's just not going to happen. The Fed has at least $10 trillion worth of U.S. debt instruments that it will have to sell in 2024, maybe as much as $12 trillion. And they aren't going to sell those debt instruments by lowering rates, unless, of course, they openly acknowledge a return to QE, which, of course, would go in the face of what they're currently doing, which is quantitative tightening. So anyway, they don't get to have it both ways. They can't lower interest rates and sell $10 to $12 trillion worth of debt instruments. They either have to continue raising interest rates in an attempt to attract organic buyers of their debt instruments. And of course, foreign countries have stopped buying U.S. Debt instruments. They actually sold over 100 billion. I think it's about $136 billion worth of treasuries that were sold by foreign countries in 2023. And most significantly, China and Japan not only have stopped buying U.S. Treasury debt, they were sellers in 2023. And of course, they were the major buyers. And so anyway, 2024 will be an interesting year to see how the Fed resolves interest rates and the need to sell such a massive quantity of debt instruments. So let's keep rolling. This is S&P 500 daily time frame. Again, very overbought based on the moving average and price action. Note that price over the last couple of trading sessions was bumping into resistance at the upper median line of this shift pitchfork, but then today has pushed up above that level. Notice that MACD is extremely overbought, has pushed up above the level of the prior peaks where price, rolled over and headed lower. Of course, MACD is not a bounded indicator. So, MACD can go to plus or minus infinity, but not uncommon that prior highs and lows mark levels where price will turn around and start heading in the other direction. So we'll see. But again, very, very overbought in this daily time frame. Now we're in the weekly time frame, pushing up towards the level of the previous all-time high, which again, that was early of 2022, January of 2022, all-time high. We're pushing up towards that level. Very bullish price candle last week. That's a very impulsive bar. Price closing near the high of the bar, and a fairly wide ranging bar, which is another indication of high energy. And so, and then of course, this is the current week's bar, that little short candle, pushing up towards overbought in MACD, obviously in bull mode on the buy signal, energy very elevated. In the monthly time frame, again, we can see pushing up towards the previous all-time high. Last month, we got a very bullish, impulsive candle. Note that price closed almost at the high of the bar. There's little bitty little bitty wick pointing up out of the top of that candle, but basically price closed at the high of the bar, which impulsive candle. MACD in bull mode on a buy signal, energy very elevated. So again, another bullish market, albeit overbought. So now we're in the Dow daily time frame, extremely overbought, but at a new all-time high. As we can see here, it's easier to see in the weekly time frame, but let's go back to the daily. So anyway, again, very overbought relative to the moving averages, overbought based on MACD, very elevated energy. So bullish chart, but very overbought. Weekly time frame, obviously pushing up to a new all-time high. MACD in bull mode on buy signal, energy very elevated. So monthly time frame, again, big bullish bar, impulsive bar last month, pushing up through this horizontal resistance level to new all-time highs. MACD in bull mode on a buy signal, energy very elevated. So you know, nice action in the equity markets. One of my thoughts when I was looking at this, let me reset this chart. You know, buy and hold. If you're the type of investor who buys and holds, we've had a 14-year run of nothing but higher prices in certainly in the S&P 500. And so if you've invested and sat in your investment since 2009, you're probably doing quite well. Tendency is people tend to overtrade their accounts, and so rather than buy and hold, they chase the latest momentum stocks. They get scared and sell at lows. They get overexcited and buy at highs. So anyway, it's a rare investor who buys and holds. But if you did buy and hold, you've done well over the last 14 years or so. One last article and then we'll be done. This showed up on Zero Hedge today, and this is China, the government in China telling companies that they need to increase dividends and buybacks because the government is trying to drive the equity markets higher. And of course, they wouldn't be doing that if they didn't know from history that, you know, buybacks drive prices higher. And so again, if you think that the US markets are rallying based on organic factors, strong economy and that kind of thing, it's simply not the case. It's corporations buying back their shares. So, you know, be careful. Be careful if you have a large portfolio of stocks. You know, maybe put trailing stops in place on your positions. Buy protection. You know, however you feel comfortable protecting your gains in your equity positions. But anyway, just be careful. And, you know, there's nothing wrong. This is actually a positive thing. You know, if corporations are making profits and can increase their dividends and pay dividends out of profits, that's a good thing. But that's not what China is telling these companies to do. They're telling these companies to go out, take on new debt, and either buy back your shares or use that new debt to provide dividends to your investors, which of course, that's just silly. You know, to borrow money to pay dividends, that's not a good thing. So anyway, just wanted to give you an overview of what the stock markets are up to. and I will talk to you tomorrow. See you, folks.